Hi, it's Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Wednesday, October 18th, 2023. Before I click on the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Please share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, the long bond ETF, and the TLT, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks. You can check everything out I just described for free by signing up for wickedstocks.com. We offer a 5-day free trial up front, so you can see everything that we do for 5 days, all of our recent stock picks, all 8 of them over the last month alone. And, there's no cost to you whatsoever, because if after 5 days you don't like what you see, you can cancel your subscription at no cost to you whatsoever. So on with the charts. Just a reminder, big picture. We came off of this long-term support area again several weeks ago, about a month ago, 165.91 to 167.32. We closed above this band of channel resistance, now support, last May, then setting off a long-term buy signal up to 229.15. That buy signal remains in effect. In other words, I'm still anticipating 229.15 over the months ahead. And if we are, over the next month or two, to close above 188.83, we could, within 3 to 5 months, actually reach 229.15. But until then, this sort of describes really our midterm outlook. Solid support in the 165.91 to 167.32 area, with resistance at 188.83, which still remains a 2 to 3 week objective, by the way, following a settlement about a week and a half ago above this 171.80 channel top. And so we have fallen off from our recent highs. This trend line off these highs actually contained the highs pretty well. 181.26 today. I don't expect to see 181.26 today unless we push through or open above 179.46. 179.46 is nothing more than a 5/8 upside Fibonacci retracement over the last 4-day extremes. If we push through 179.46, 181.26 in reach, where we could actually top out again on a daily basis. But I think on the next approach, you should be a little careful. I think it's a solid day trade level, but I don't see it as a 3 to 5 day swing trade by any means. I think it's susceptible to violation on the next approach. And if we were to close above 181.26 over the next few days, I see this 188.31 2 to 3 week objective likely to be realized by the end of next week. So keep that in mind. 179.46 is a decent day trade level, below which 174.98 is in reach again intraday. 174.98 is a downside 50% retracement from that September low against the more recent high. It can continue to behave that way. We could trade inside the 174.98 floor of support to 179.46 ceiling of resistance throughout much of the day. But once again, if we push through 179.46, 181.26 is likely. That is really kind of a range that begins at 181.02, but I'm using 181.26 as the focal point to sell, whether you long from a push through 179.46 or whether you're just selling outright to go short for the day. You could consider selling it for 3 to 5 days, but as I say, I'm not crazy about that on the next attempt. I think given the recent buy signal a week and a half ago above 171.80, almost 2 weeks ago, still anticipating 188.31, closing above 181.26 is certainly in the cards here, possibly over the next few days. And by the end of next week, we should then test 188.31, where we could actually top out well in a November trade and fall back again into the upper 160s. This image shows it pretty well. We could top out in the 188 handle and fall off again by the end of November, perhaps, to 165.91 to 167.32. We could fill this wedge out through the rest of the year. But once again, it would be a settlement above 188.33 that would set up a meaningful buy signal, secondary sign of strength that should, over the following 3 to 5 months, yield 229.15. Talking downside today, that if we do happen to break or open below 174.98. That 171.80 channel top is attainable and able to contain weekly selling pressures. And once tested, we could round back up into the upper 180s resistance within 2 to 3 weeks of doing so. Finally, it would be a settlement below 171.80 that would signal this long-term support region again, probably by Friday's close in the 165.91 to 167.32 region. So closing below 171.80, expect within several days this band of long-term support where we could bottom out through the rest of the year, possibly well into next. And if we were in the coming weeks to close below 165.91, the market does actually indicate longer-term bearish continuation down to the 132.01 channel bottom. I would expect this move within about 3 to 5 months, but we're nowhere near that right now. We are above 165.91 to 167.32, and I am still anticipating in the months ahead, in the weeks ahead, 188.83. In the months ahead, 229.15. I'm going to leave it at that. I will find the image that I think is best suited for the day. Could it be this one? Sure. We'll call it this one. 174.98 intraday support, 179.46 intraday resistance. If we push through 179.46, expect 181.26 intraday. I'll leave it at that for Wednesday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.